It is said that you are the average of the people you associate with. I'm Marc Sperling, T3 Live contributor and director of trading at T3 Trading Group. In trading, I believe it is especially beneficial to surround yourself with smart and talented people. In that vein, T3 Live would like to invite you to a New York City headquarters on President's Day, Monday, February 18th, from 4 to 7 p.m. for an exclusive networking event. This informal gathering will allow you to interact with me, Scott Redler, Evan Lazarus, and other mentors from T3 Live, as well as other traders and T3 Live community members just like you. We also have 90 minutes worth of value-added trading education planned for the day. The event will include refreshments, a tour of the T3 Trading Group LLC trading floor, and a behind-the-scenes look into the T3 Live studio. Attendance will be very limited, so be sure to register early by visiting t3live.com and clicking through to the coming events calendar, or calling 1-888-998-3548 to speak to a representative. I look forward to meeting you on President's Day. Good afternoon, everybody. This is Mark. We're doing the daily recap a little tad early. I got to head out a little bit early, but overall, we're seeing a little weakness. We're down, at this point around 65 points in the S&Ps. A little weakness right at the 8-day moving average in the spiders. We'll have to see if that holds, if we break it. I think there's some nervous money, into the weekend, which again, the shake the tree moment I know is going to happen at some point in time. I don't think this profit taking is anything special except that it's profit taking, but at the same time, it's not bad to take some chips off the table, especially if you've been hanging on the trend for the last 6 weeks or longer. It's obviously been a good move, and I don't think it's over yet, but I understand and respect the fact that it's okay to take some risk off the table. So that being said, spiders still hanging in there, everything intact. I'd love to see a little digestion, in the S&Ps, and I think individual stocks are showing their girth across the board. We're seeing real leadership in the banks. Even today, though, you have a Goldman Sachs, down a little bit. I think it's its first real red day in, I can't even see, in 2 months. So to me, that doesn't mean anything, and it's still in a rising channel that, looks good and should continue higher, but at some point, a digestion would be actually healthier across the board, and that goes for other stocks in there. JP Morgan, Morgan Stanley, Bank of America, Citi, same type of pattern, all at the upper third of the trading range. They all look good across the board. High beta, a little bit mixed bag. Apple, had a week last Thursday through Friday and really has not held up there. It held the breakout at least today, right now 460, but it should never get back there. And so that's going to definitely make people second guess. It's not the same stock it was. Above 485 would be breaking a descending channel. So it still has 20 more, about 15, 17 points, depending, 25 points at this point, to really get back to where it would really break a channel and resume its uptrend. It's not there yet. It hasn't even been a good trading vehicle. Best in breed chart-wise, I'm still seeing it on the Google, Netflix, LinkedIn. Hands down, they're the best looking stocks out there. They obviously had their, showed their strength this week, and they look good from a leadership standpoint. It's good to see, but at the same time, they're not the easiest ones to trade. Facebook's trying to find some new levels at this point in time. I think next week's going to be the week, ideally, if we have an up week, that it gets back above 30, but we'll have to wait and see. It's maybe 1 or 2 more days of digestion. We'll have to wait and see. Oil stocks has had a good move. OIH is right at the highs, and now they're giving a little bit back today. I think digestion at new highs is fine. Just go down the list. Schlumberger, Chevron, Exxon's lagging a little bit. But at the same time, PXDs, EOGs still doing well. Solars pulling in a little bit today, but really reached, new yearly highs, new 12-month highs. That's good signs. Obviously, heavily shorted stocks. Certainly, FSLR is. If it can hang up here, you're gonna find a short squeeze. It's moved up a considerable amount so far in the last few months. So, shorts ideally have covered a little bit, but you haven't seen that violent move that normally ends a short squeeze. So keep it on the radar, keep the lookout, and we'll go from there. Mixed bag overall this week. We really could not penetrate over that, 14, certainly the 14, I think it was 2. We couldn't get to new highs, quite frankly. Hovering now below there. One more week of this, you're going to see, this is basically 2 weeks of sideways action, which is healthy, which means a move, ideally, I think higher is in the cards for us. It's just a matter of how it happens. And this resting is good. It's healthy. And I like to see it across the board. And obviously, you got to prepare accordingly. Some of the leadership stocks, the DDDs that we were looking at, not showing great strength. Ideally, you'll see a bounce next week. We'll have to wait and see. Same thing with SSYS. I actually just pulled up the monthly just so we see, give some relevance to this move. It's right now coming back to its 8-day moving average, the SSYS, which is around 67.40. So it should hold there, and it really hasn't broken there in almost 2 years. So the move is getting long in the tooth, but at the same time, I don't think it's over yet. DDD has a little bit more room on that side, so it is getting a little extended, and that's what's happening. They're coming back down to earth, and you got to respect the fact that that's happening. Not a bad thing with how these stocks trade. Obviously, there were some individual good trades this week. Yesterday was the BlackBerry trade. It actually pulled back a chunk today. Not such a good sign. But overall, guys, I think things are healthy. Gold, we really haven't been talking about it. If anything, we were talking about it a little bit more. That has not given you a good trade, certainly on the long side. So for those that short, you got rewarded today. Right, I think we're below 1,600. I could be a little off. Needs lots of time, period, to digest around here to see if there's any move, any consolidation to the upside. So that's where we're at. Overall, the shake the tree, is it going to happen? It could. I think it's still going to create a buying opportunity if that's the case, and that's what you have to be prepared for. That will create a nicer buying opportunity for us. I think people are taking risk off right now. Today, I don't think it's a bad thing. And we'll go from there. I don't think people have to look into, a 60-point down move in the market as anything to really, be scared about. But respect the fact that this rally is a few months long, and a day or two or a week or two of downward action is not a bad thing. Hopefully you took advantage of some of the trades we had this week. There's lots of them, lots of good two-way action. I like seeing that in the market. You are definitely getting two-way action, and that's healthy from a trading perspective. And ideally, we'll have some good trading next week. Hopefully I'll see some of you guys on Monday, 4 to 7 in our offices for, really it's a social meeting, but I love to see people. If you're in the tri-state area, certainly New York City area, you can look on our website to sign up. And if not, enjoy the long weekend. I'll see you back on Tuesday.
Most people say you can't time the market. I say you have to. I'm Scott Redler, Chief Strategic Officer for T3 Live. I would like to invite you to an exclusive swing trading event in Newport Beach, California on Saturday, February 23rd. Students will learn the 5 keys to becoming a successful swing trader and how to navigate the market using what I call a portfolio approach when it's conducive in the market. Reserve your seat at t3live.com or call our toll-free number 1-888-99-T3 Live.